Just before Christmas, we saw the government rush through legislation capping wholesale gas prices at $12 and thermal coal prices at $125 per tonne. Since then, energy retailers have said they've been unable to secure gas under the $12 price cap, and they're struggling to find any provider at all. So it's a policy that hasn't relieved businesses or households in the short term, and it seems that it's going to become problematic for investment and reduced availability in the long term. But despite all this, we've still had the Assistant Treasurer out today telling businesses to hang tight and touting early signs the government's energy interventions are, quote, starting to work.
So those longer term contracts, the wholesale prices in the energy market will start to flow through into prices that households are paying and the businesses are paying.
Just fills you with confidence, doesn't it? Well, joining me now to discuss this is the Environment Editor for The Australian, Graham Lloyd. Graham, happy Australia Day to you, but I'll believe it when I see it. It seems to me this is only going to lead to billions of dollars in taxpayer-funded compensation payments and really do damage to industry overall. How do you see it?
Yeah, hi, Cory. It's an interesting situation we find ourselves in now because what we do have is the billions of dollars of compensation to coal producers in New South Wales and Queensland, and what we don't really have is any clarity of what is going to happen in the energy markets, particularly in gas going forward. There's some positive signs that the international market is sorting itself out, but really there's a lot of confusion among the producers about how the government's response is going to work in the longer term. I think we've had the price cap, but now we have some pretty detailed discussions about whether they will be forced to sell gas at a reasonable price going into the future, and that will really make them think very hard about how they make investments going forward.
Yeah, well, you wrote about this brilliantly today, and you're suggesting a quick fix by this government will do or could do lasting damage. What do you think are the long-term dangers of price regulation, and has it worked anywhere else in the world?
Well, price regulation has been shown to make markets less efficient and generally raise prices overall. And the situation that we have here, it's like the government has felt compelled to act because there was a spike in prices for a combination of reasons. And they've taken action, but now the market seems to be stabilising. If you look at prices in Europe, where they were very, very high because of the interruption from supplies from Russia, that shortfall has been taken up largely by the United States. There's been a much milder winter than they had expected. So gas prices in Europe are about 25% of what they were at the peak and half the price they were in December. So the market's starting to rebalance and every indication is that things will return to the long-term average, which is below the government's mandated price. But the difficulty is now there's discussions about regulating the market going forward. So producers are sitting back and saying, how much risk is there in making investments? And you could end up with the situation as we have with oil and refined petrol and other products, which we now import when we used to produce ourselves. The gas producers may just say, well, look, we'll put our money somewhere else.
It's a huge challenge, but if things are returning to the norm, as you suggest, does that mean the government should actually reconsider this legislation and maybe go back to the Parliament and repeal it and say, no, it was right for the time, if that's what they want to claim, but now the times are different?
Well, it's really the issue of confidence and certainty. The price cap that has been put in place at $12, that's for 12 months. It may well be that within a few months prices will be back there anyway, so it won't be necessary. But the longer term discussions that are now taking place about what a reasonable price is for the industry over the long term really just lets the industry know that the government's prepared to intervene if it wants. It can do things out of a political need more than anything else, and so that's that's the very definition of sovereign risk.
Yeah, it certainly is. And Graham, are those conversations taking place right around the world about regulation of the gas and oil industry, the coal industry, anything attached to energy, or is it just something that Australia is busying itself with?
Well, Australia is looking at the production side, but places like the UK and elsewhere, they're looking at a regulation at the retail level. They're looking at subsidies. They're looking at sort of paying people to reduce demand. Everybody is trying to find a way to cope with what has been a very irregular market over the past several months. But the thing about markets is that they respond to those pressures, and over time they will find the balance. Intervention by governments often tends to make the sort of difficult times longer, if you like.
What do they say? The cure for high prices is actually high prices because it encourages more production, which lowers prices in the long run. Unfortunately, governments do interfere. Hey, I'd like to draw you out on this. The inflation figure was 7.8% year on year in the October to December quarter. Yep. That's the highest rate since 1990. It's been pushed higher by the rising cost of energy. And yet we've still got Jim Chalmers fronting the public saying he's hopeful the price growth has peaked. Do you have a view on it? Is the Treasurer right?
Well, look, that's beyond my pay grade. I think it's the billion-dollar question. Has inflation peaked? It's the issue that's dominating central bankers around the world. If you look at Australia's position from the figures released yesterday, tourism and energy were the two drivers for inflation, and there's some rising prices in supermarkets and what have you. Of course, the cost of travel and the cost of energy, they're all linked. We're really looking for those energy prices to stabilise and reduce, and that will take the pressure off inflation. There's a view in the US particularly that the peak has passed. Australia probably trails a little bit what's happening there, but you can really only watch and hope.
Yeah, and for all those people out there, worried about their household budgets, just because if inflation has indeed peaked, it means your prices are going to go up by slightly less than they were previously. It doesn't mean your prices are actually going to be going down right across your household budgets. Graham, Lloyd, I really appreciate your insights. Thank you for sharing your expertise with the audience tonight, and you enjoy the rest of Australia Day.